The U.S. stock market is in turmoil, following newly imposed tariffs by President Donald Trump in his second term. Financial markets are experiencing one of their worst downturns in recent years. Investors are panicking, businesses are taking massive hits, and concerns about a potential recession are growing. But what exactly is happening? Why are stock prices plummeting? And will Trump's economic strategy ultimately help or hurt the American economy? In this video, we'll break down the impact of these tariffs, the market reaction, and what this means for the future of the U.S. and global economies. And if you're interested in staying updated on global economic trends, make sure to subscribe to our channel, turn on notifications, and hit that like button. The effects of Trump's tariffs are already making waves, and the numbers don't lie. The Nasdaq suffered its worst day since 2022, losing billions of dollars in value before slightly recovering by the end of the trading session. But that small rebound isn't enough to ease concerns. In total, the U.S. stock market has lost over $4 trillion since the tariffs were announced. Canada's main stock index also dropped, and markets across the globe are reacting with uncertainty. The American economy, which was already showing signs of weakness last week, has now entered what analysts are calling its worst downturn in years. The question now is, what happens next? Will the American economy recover, as President Trump claims? Or is this just the beginning of a deeper financial crisis? Stocks have been falling amid growing fears that the United States could be heading into a recession. The Dow Jones Industrial Average lost nearly 900 points in a single day. The S&P 500 dropped 2.7%, while the Nasdaq fell 4%. Some of the biggest losses came from the tech sector, with Tesla's stock plummeting by 15%. Other major companies, including Apple, Microsoft, Alphabet, Amazon, Nvidia, and Meta, saw their stocks fall between 2 and 5%. Over the weekend, President Trump addressed concerns, but instead of reassuring investors, his comments only added to the uncertainty. When asked if the U.S. was heading toward a recession, he refused to rule it out, saying that there would be a transition period because, quote, "What we're doing is so great." His words did little to calm Wall Street. Meanwhile, Commerce Secretary Howard Lutnick attempted to reassure the public by stating, "There will be no recession in America." Despite the administration's confidence, many investors remain skeptical. Some argue that Trump's approach to trade and tariffs is reckless, potentially triggering an economic downturn that could have long-term consequences. Investment analyst Shelby McFadden from Motley Fool Asset Management pointed out that, for the first time in history, an administration has openly admitted that its economic policies will lead to financial pain before seeing any potential benefits. The job market remains stable for now, but concerns are growing that rising unemployment could follow. Analysts fear that job losses could increase, especially as the administration pushes for mass deportations and major government layoffs. George Calwan, a portfolio manager at Penn Mutual Asset Management, believes that these policies, combined with trade instability, could lead the economy to a hard landing. The stock market's decline follows a turbulent few weeks of trading, with investors struggling to make sense of shifting trade policies. The S&P 500 ended last week with a 3.1% decline, the biggest drop in 6 months. Meanwhile, the yield on the 10-year U.S. Treasury bond fell to 4.21%, down from 4.31% last week, reflecting growing concerns about economic stability. The Wall Street Dollar Index has also suffered, hitting its lowest level since early November. The decline is partly driven by uncertainty in both economic and foreign policy. The effects of this uncertainty are being felt not just in the United States, but across the globe. Chinese stock markets suffered major losses over the weekend as inflation data showed a sharper-than-expected drop in consumer prices. European markets are also reacting, with the Stoxx Europe 600 index falling 1.3%. However, European defense stocks have continued their recent rally, showing some resilience in the face of global instability. So what's causing the sharp downturn? One of the key factors is that stock valuations have been historically high. With the introduction of new tariffs and uncertainty in trade policies, investors are finally pulling back, triggering a major market correction. Companies that were once seen as unstoppable are now seeing their value slashed. Tesla alone lost over $125 billion in a single day. Meanwhile, Delta Airlines slashed its first quarter profit forecasts, leading to a 14% drop in its stock price. The uncertainty surrounding the economic landscape is making businesses cautious, leading some analysts to predict that more companies will lower their profit expectations in the coming months. The fear of a recession is now at the forefront of investors' minds. President Trump himself addressed these concerns, saying, "I hate predicting these things. There's a transition period because what we're doing is so big." But Ross Mayfield, an investment strategist at Baird, sees things differently. He believes that the administration appears comfortable with the idea of a short-term market crash, even if it leads to a temporary recession, as long as it aligns with its broader economic goals. Despite the White House's attempts to calm fears, the uncertainty remains. Kevin Hassett, the president of the National Economic Council, insists that the economy is still strong and that volatility in the markets will soon stabilize. He argues that the administration's tax cuts will help boost investment and increase real wages. However, investors are still on edge, and the market's ongoing instability suggests that the situation is far from settled. So what happens next? Investors are closely watching several key events that could shape the direction of the markets in the coming weeks. The upcoming inflation report, the Federal Reserve's interest rate decisions, and potential government intervention could all play a role in determining whether the economy recovers or continues its downward spiral. If investor confidence continues to decline, the markets could see even bigger losses ahead. Investment analyst Dan Coatsworth from AJ Bell advises that as market volatility continues, investors should focus on staying informed and diversifying their portfolios to manage risk. The coming weeks will be critical in determining the long-term effects of Trump's economic policies and whether they ultimately help or harm the economy. Meanwhile, trade negotiations with Canada and Mexico are beginning earlier than expected. Talks to renew the United States-Mexico-Canada Agreement, or USMCA, have already started, with key officials from all three countries meeting in Washington. The Trump administration is expected to use its tariff strategy as leverage to secure new trade terms. However, it's still unclear what specific goals the U.S. has in these negotiations. The White House has only stated that it remains committed to, quote, pursuing fair trade. Whether these negotiations will ease tensions or add to market instability remains to be seen. So, what do you think about all of this? Is Trump's strategy a bold move that will pay off in the long run? Or is it leading the U.S. into an economic disaster? Let us know in the comments below. And before you go, don't forget to subscribe to our channel, turn on notifications, and hit that like button so you never miss an update on global finance, trade, and the biggest economic stories shaping the world. Thanks for watching, and we'll see you in the next video.